Hey everybody, hope you're doing well. Today we're going to cover this week in the Qs, QQQ or the NASDAQ-100 for July 5th, 2021. If you like this content, please like or subscribe. We do this every single week. Let's just jump into our scoreboard, our earnings scoreboard. So for the last 15 weeks, we've had 15 recommendations or how a company performed during their earnings. Last week it was Micron. They did exactly what we expected them to do, which was crush their Q3 earnings. We had some cautions around future outlook, which they didn't address, and their stock got pushed back. They also sold some of their business. So there's just some questions on Micron and next quarter. But generally, they look like they're going to still produce well in Q4 on a good track. But they just had bad earnings in the sense of discussing futures. And that's the reason why Prep2Grow doesn't actually trade companies that are announcing earnings. Because even though they crushed earnings and should have had a good performance on their stock, it's just sometimes things just don't work out that way because the management doesn't talk well about topics that they should talk about. So Micron made it, crushed earnings, did what they said they were going to do, had the caution around future earnings, didn't address it, and stock got crushed. But earnings are great. Q4 I think will be good. Long term, Micron is still a recommendation from Prep2Grow. We actually bought into it yesterday when they got pushed back. It's a good buy. So chips, everything related to that are a good market. So we'll cover Micron when they come up again in Q4. So let's talk about last week. So our prediction was a small bear. Clearly that didn't happen. Took off like a rock this week, up 2.6%. Year to date, 14.2%. So the start of what we're expecting is a bear cycle just hasn't happened yet. There's a decline week over week in our forecast and growth. So we're about negative 2.6% over week. It's pretty big pullback. But it's also we're going into vacation season, so typically there's a natural pullback, anyways. Analyst forecasts flat. They've been flat weirdly for the last 3 weeks for the Qs. So we'll see what happens. Stock is all-time high. What 358 today? I mean, Qs are still skyrocketing. Concern, obviously, we have a lot of bear signals, the strongest bear signals we've seen since February of 2020. We all know what happened in March, so let's just kind of jump into our forward look. But before that, just a quick housekeeping. We're going through a seed round. We're going through a crowdfunding called wefunder. We're also doing VC funding. But if you're interested in funding or being a part investor or part owner within Prep2Grow, we'd love for you to join us if you're interested. We'll put it in the description as well, but you find us at wefunder.com/Prep2Grow. A lot of perks related to this. So again, if you're interested, feel free to invest in us, and we'd love for you to be part of the journey of disrupting the $1 trillion financial advisor and fintech marketplace. So let's jump into next week. We're still predicting a bear for sure. We'll talk about some of the signal strength in the next slide, but we should be in this week. Should have been week one of a 4-week bear cycle. Clearly, it was not. So either it got delayed, which we think is because of the macro and micro news. There's some very good news this week on the job side. Good news for Facebook. A couple of good news around for the real big QQQs. And you should know this, that the FANG Pluses make up, or 15 companies make up roughly 68% of the total Qs. Amazon's, Tesla's, Google's, Facebook's, etc., and they're all doing well. So Facebook had a lot of good news. We always felt Facebook should be much higher, so it's not a surprise that they took off, especially after this antitrust stuff that got figured out. But macro news and micro news is kicking it up. If you look at other sectors, they're suppressed. They're going down. Just some good news in the Qs that are keeping it going. So we see outside of the Qs, which is concerning, which is probably leading to a lot of bear signals. For the non-Qs, are really the folks that are in SP 500 or the SPY ETF. 5-week flat growth, not a good sign. They've had good growth generally throughout the year, but they've been almost completely flat in terms of corporate growth. Stock prices increasing a little bit, so that makes for a bad sign. Going into vacation season, which is really not a lot happens within August. There's some pullbacks because of that. Also, there's no earnings really this week. Some start next week, and then some go back into heavy earnings season the week of the July 19th. You know, the Netflix and those folks, Intel's and Microsoft's are starting to announce at the end of July. So heavy earnings season coming up. Stimulus ending. We're going to talk about this a bunch over the next couple weeks, which is a big concern. Obviously, Supreme Court, some things around some protection around moratoriums around evictions and that kind of stuff. So good news for that, but still, it's going to be an interesting time when stimulus ends. If we look at bear versus bull signals, a lot of bear. So let's just jump into the signals. So we work really at a 30-day forward-looking projection. So when we look at 114 bear signals, that's really the beginning of July. So now is where we expect a July bear to hit. So we thought it was going to start to be flat to a little bit down this week, but clearly it didn't happen. But we're looking at through the end of July, a pretty big bear. I think because there hasn't been a pullback yet, it's expected to be a bigger pullback. That's at least what the algorithms are predicting. Could be true, could not be true. Obviously, when you use algorithms predictions, there's an error rate associated with that, but our algorithms have rarely been wrong at this. Again, last time we saw this kind of bear, this big bear signal was February 2020, and March of 2020, things obviously went sideways on the market and was sideways for about 3 months. So this bear signal is very strong. So we're going to have to be cautious about going into that and the downside protection. Again, 30-day forward looking, which is a bear cycle pretty soon potentially. Let's look into who's announcing next week. Boring week. Nobody in the queues is really announcing. Last week, there's Micron, Xilinx, also Walgreens announced, and they got hammered. Usual activity in NVIDIA, there was a large puts that we talked about last week. Clearly, and as we talked about last week, didn't work out well for those folks that bet against NVIDIA, and I should never really bet against NVIDIA. This week, we're going to cover Bed Bath & Beyond. They're really the only one notable announcing this week. Usual activity, Skills, and Spotify. Both pretty interesting, and we'll talk about the usual option activity for those two. So let's jump into them. So for those that haven't seen Prep to Grow, this is Prep to Grow. This is what we just really call portfolio. So we put together recommendations for folks and orchestrate into portfolio based upon their personalized needs. This is something that's been running since June 20th. We're up 5.4% in the last 12 days. 5 wins, no losses. This is a mix of options and stocks, and it's also analyzing our test account for Prep to Grow. And this is just the return we're seeing. So this month they're expecting 1,900 return based upon our investment, but this is the forward-looking projection for growth. So if you're interested in portfolio and being able to do essentially one-click trade, if you just click this button, it'll buy the stock for you into your brokerage of choice or non-commission fee brokerage like Ameritrade E-Trade, you can do so. But let's jump into this week, the ones we talked about. Let's talk about Bed Bath & Beyond. So we'll talk about the most recent recommendations we've had that has come out on this. This came out on yesterday, July 1st. If you don't know Bed Bath & Beyond, they are obviously a retail store. They do domestic merchandise. That's just the fancy word for saying they sell towels, sinks, everything related to that, and ugly pictures that my wife really loves and have one in her house, and cannot stand that picture. But you know how it goes. Bed Bath & Beyond, we've been tracking them since 2012. They're announcing their Q1 2020 on July 16th. We have pretty good accuracy with them on puts. We actually don't recommend short stocks, or we would recommend this. Folks typically don't know how to sell or trade shorting a stock, and it's pretty complicated and a bit more risky. So don't recommend it, but if this was a short stock, this would be a good buy. This is a put. We're predicting that if we look at our forward projections or predictions, we're expecting that Bed Bath & Beyond is going to go down 9%. Within, on average, we look at about a 30-day outlook. In this case, it is by July 31st. We expect a 5% decline at least in stock price. We have good accuracy with this. Again, 5-day, 30-day, different recommendations and predictions based on the algorithm. 2 different algorithms predict short gains versus longer term gains. We're 83% on short 5 days, returns to the 5 days, or 148 out of 177 predictions made the designated for an option, 15% return within 5 days. Longer days, 86%, or 161 out of 187 successfully hit the targeted 15% gain. Again, these are actuals. These are not some back testing, which anybody can make look great. This is our actual predictions that we make every single day, and we see how they run. We don't do back testing. It's a different type of algorithm and methodology. It's real. Again, back testing is a joke, to be frank. You shouldn't do that. Try to figure out what algorithms work or not. Gotta make it real. So let's look at this one here. Let's look at they're up today in terms of a put down. They actually dropped 4% today. Not a good sign for them. They're up at 31. Let's just talk about them real quick. Technicals. Current price 31, 200-day moving average 24, 52-week high is a $53 range. Let's be clear. I mean, Bed Bath & Beyond, to say that they're in trouble would be probably a dramatic understatement. And they're not getting better. You would expect with openings and the market conditions and the vaccinations and whatnot, you expect that there would be a better showing with this company. It's not. It's getting worse. They are at a near all-time low in corporate growth, which is a huge problem when you have over 1,000 stores. So our projection for them for this quarter, which is Q1, and the market just closed. It's 1 o'clock Pacific Standard Time. They're going to get hammered in Q1. That's our predictions. They're not doing well. They should pull back quite a bit. We're expecting, as of yesterday, a 9% pullback in stock price. Let's look at their unusual option activity here. So there was one, I think it's from June 10th, which had the most unusual option activity, which was 4.39 for the day. And it was what? Well, this is not what it was. So essentially, I think 1,200. I'm not sure, but this sold back in June. So not a lot of more recent unusual option activity. This did sell. It did actually hit the price target or do the decline. Again, not a lot of usual option activity for Bed Bath & Beyond recently. Very low actual volume, to be honest. Let's talk about Spotify. We're very good at predicting their decline in price. They're not making an announcement until July. Spotify, if you don't know who they are, they do music and podcasting. Like Joe Rogan's on Spotify, great podcast. They are pulling back. We expect that they're going to drop in price in $9 or 9% or $23. Again, it actually takes quite a bit longer for Spotify to hit their targets. On average, it hits 44 days to make a return off a recommendation, and worst case is 88 days out. So this is not a quick return, although we're very good at predicting a 5-day return versus a 30-day return for options against 15% target. But these guys have had a ton of usual option activity. This is from yesterday, usual activity for this one, which is in October 15, 2020, expiration date at the 260 stock price. Yesterday, it was 2.6 volume to open interest rate ratio, essentially 703 volume. Somebody bought 73 shares to 271 open interest. So somebody's playing against them to go down. I went up today, it looks like. Well, no, they're down just a tad for the day. Their moving day averages are below their 200-day moving average, and they're above their 20-day moving average and 5-day moving average. We're projecting that they're going to go down again 9%, very accurate on Spotify. Some unusual option activity here from yesterday. Again, 2.6 volume to open interest rate ratio. Let's look at skills. Skills we just started tracking actually. So I don't recommend them, but they had some pretty interesting, unusual option activity. It's a mobile gaming platform. Interesting. They're in the ARCs. We're predicting that they're going to go down 5%. We're not very good at recommending them. About 9 for 14 within 30 days. We've only recommended this once with a 5-day success rate. And that, if you see this dash here, it means it hasn't sold yet. We've been tracking them since 2020. For this one, unusual option activity was about 6.1 as of yesterday. For their August 20th, 2021 option expiration at the $15 strike price. Yesterday, this option activity was 6.1, 21,000 shares or volume to 3,600 open interest. So again, a volume to open interest rate at 6.1. So huge volume for these guys. We'll have to figure out why and see how they do over the next couple days. But again, it's projecting a pullback. They're down 4% today. So whoever made this bet yesterday certainly paid off for them today. So again, the only one really announcing next week worthy is Bed Bath Beyond, but let's talk about them as we close out the week. Bed Bath Beyond announcing next week. We believe they're getting crushed. All-time low growth rate. They've had an increase in stock price. I believe they're going to get hammered. Spotify, to summarize, flat growth over the past quarter, high stock price. Actually, it's dropped. The stock price has dropped a little bit, but the expectation is that their stock price should be 25% greater than it is per the analyst. We obviously don't believe that. So it makes a bad combination of stock price. So that's why there's a whole bunch of put volume on them. Skills, same thing. Declining company. They're not growing from a corporate growth perspective. However, the stock is increasing, and somebody made it against them yesterday, and it certainly paid off today. So that's unusual option activity and announcements for July 5th. I hope you have a great week of trading. Again, the Qs, we're projecting some pretty serious bear activity going into it. Again, bear signals are just as strong as they were from February of 2020, and March we saw that things started to pull back and fall apart a little bit. So use caution on the Qs. Obviously, there's some companies that are always going to do good in individual investments, but again, collectively the Qs looking for a pullback. If you have any questions, always feel free to reach out to us at contact@prep2grow.com. If you want to see this material, you can go to our website at prep2grow.com/QQQ. You can always take a look at it. Again, investing into earnings is highly risky. Options are risky. Investing into earnings is 10 times riskier than just buying options. So we don't recommend investing into earnings. It's insanely risky. So use great caution when you're investing in companies that are going into earnings. Also, everything you talk about comes from the Big Data or Prep2Grow's Big Data AI platform. We're not financial advisors. This is recommendations that come out of all the data that we collect on a daily basis. So again, always use caution in investing. Highly, highly risky. We thank you for your time, and we hope you have a great week of trading. Happy trading. Take care.